Barnabas Sale. I've been trying to make the PowerPoint presentation, but seems like the PowerPoint app is fucked in this PC, so I stopped with that. Anyway, first thing first. Since we're doing a gold review, the very first thing I'm gonna take you through it as if I'm using my very approach, so you can get to understand how I operate. What I do is that before going into the charts, I want to look at what drives gold. Gold is an XAUD USD commodity. So basically, what that means is that it's a gold driven, no, it's a USD driven market. So I'm only gonna do what I'm only gonna focus on the high impact news release on USD for this week only. I'm not gonna take everything else here. I'm only gonna do what I'm only gonna be focusing on USD. Then I'm gonna apply that filter. Why am I applying for a bank holiday, right? Let me just go back. High impact, medium, low impact bank holiday. I'm only looking at high impact and medium and a holiday. Why? Because I don't want to be trading during a bank holiday, though that is automatically low probability. Now, after that, do we have any of the big three on the chart on the weekly calendar? Do we have CPI? No, we don't have CPI. Do we have NFP, FOMC, the press conference? No, we don't have any. So I'm looking at what Tuesday, Wednesday, Thursday, and Friday to possibly offer me setups. Why? Because uh the markets rather are not gonna be held in a consolidation or in a range waiting for any of the big three release because we don't have any of those, right? So I'm anticipating that if price aligns, right? If price aligns with time, then any day that gives me a setup, I'm trading that day on New York session. Now, with that being said, let's go to time aspect for trading views settings. So you want to set your thing to, I want to be very quick with this video. I don't want it to be long. You want to set it to New York time right here, UTC minus 4. It's usually on UTC only, and you can see the time is what? 13:29, which is 2 hours behind us, but we want to set it to what? We want to set it to UTC minus 4, which is New York time, and the time is literally 3:30 on our end, and here it's 9:30, right? This is how we should be operating with this particular settings. We are 6 hours behind this very time in New York because this is the time that the algorithm refers to. Now, with that out of the way, I'm gonna go to I'm gonna go to I'm gonna go through the screenshots that I took because I don't have a PowerPoint slide. And if there's any inconsistency, you're gonna have to bear with me because gonna get this snap island here. Anyway, we have the weekly chart. This is how the week looks like. The weekly chart looked like on gold last week, right here. Trade into this weekly fair value gap. And then what would be the expectation for next week, which is this current week? The expectation would be what? Open, low, high, close week, right? It's a bullish candle being anticipated to form. So we can target what? This external range buy side liquidity pool. How did the weekly candle, the daily candlestick rather, or the daily chart look like? What the fuck am I saying? Anyway, so there's Friday, right? Open, low, high, close expectation. Now let's see what Monday does. We trade into this weekly fair value gap as I said there last week, right? So we want to see what a change in the state of delivery or either on the 4 hour or on the hourly time frame inside this to confirm what our reversal. But look at what Monday does here. We form a daily fair value gap rather. There's our weekly open. We want to see what open, low, high, close week. Now let's see what Tuesday does. Tuesday trades into that fair value gap, and that is the day that I want to be focusing on. Tuesday trades off this daily fair value gap, trades higher, attacks what? Previous daily high, that's your buy side liquidity pool, and it forms what? Low resistance liquidity runs. What is this? It's a trend line liquidity, or it's a series of failure swings here. So the algorithm is most likely to attack that on Wednesday, but I'm not going to go into Wednesday. So we have had our open, low, high, and we're still anticipating more expansion to the upside. And wherever we close, I don't give a fuck. Now let's go to the lower time frames, right? Okay, before then we have Wednesday, Thursday, which is today, takes out that buy side liquidity pool, and yeah, we're good. But let's look at how the weekly is currently looking this very week at the moment of this recording. Tapped into that weekly fair value gap last week right here, and then we pushed higher to that external range liquidity. Open, low, high, and we don't know where we're gonna close. So none of my concern really. Now let's proceed to the change in the state of delivery. The change in the state of delivery is either a series of down close candles in this case, trading into a key level. And then once we close above those, we confirm them as a bullish order block. Or it can be one singular candle and then it's confirmed as an order block. Now, right here, if you look at this, we have 6 series of down close candles trading into the weekly fair value gap. There's a 4-hour time frame, right? We close above it right here with this displacement, come back into it. Look at the reaction that we're getting from this series of down close candles. There's one single order block, right? Take it, go back higher. I'm gonna zoom into it, right? Series of down close candles, close above it, trade back into it, we trade higher. We are changing the state of delivery from bearishness to bullish price delivery. Reversal confirmed by what? A change in the state of delivery of a key level, which is the weekly fair value gap. Now I'm gonna go back to this. Look at something. Why am I not using this series of down close candles, even though they're taking this fair value gap? It's because these ones are lower than this one. Look at the close of this candle. We have the last down close candle as this one, and it's in the series of these candles. And then we have this one in the middle of all this. So we're using this one instead of all these ones, right? Now let's proceed. If you look at, okay, no, before I proceed, if you look at on the other side, we trade into this daily fair value gap, up, displace above the series of down close candles, come back into it, trade high. This is for this week. This was last week. This is for this week. Now I'm going to show you something. This is how it looks like off the daily fair value gap, displace higher, trade back into it. I'm still using the 4-hour time frame, but the good part is you can use the hourly time frame to confirm your change in the state of delivery. Let's go to that. This is Monday, Tuesday, Wednesday. I'm focusing on what? On Tuesday. There's the weekly opening price. We open here at midnight, trade higher, then we start to consolidate, trade lower, manipulate. There's your accumulation, manipulation, and distribution. How do we confirm that we're on the right side of order flow? We change the state of delivery right here once we close above this series of down close candles. One, two, three, into the daily fair value gap. That's your series of down close candles. And where's your target? Your target is that previous day's high. That's your buy side liquidity pool. It's your minor liquidity. Where's the draw on liquidity? The main draw on liquidity is right there, up there. Now let's proceed. On Wednesday, we see price confirming the series of down close candles as an order block as we close above them here. Trade into that, keep on going higher to that magnet. But I'm not focusing on Wednesday, so let's go back to Tuesday. Now, if you want to see Tuesday clearly, you can see the series of down close candles engage in that fair value gap, come back into an hourly fair value gap. And if you measure the bodies of this series of down close candles, these three candles, you realize that we're not closing below 50% of these bodies. And we are not closing below 50%, which is consequent encroachment of this fair value gap. So there's still maintaining order flow as bullish. London forms the law of the day. New York, you expect a retracement to continue higher. Open, manipulate, distribute higher. Now let's proceed to the lower time frames. I would go to what? I would go to still on the hourly. I'm gonna be looking for entries inside this hourly point of interest. Whether I'm using the order block, whether I'm using um the fair value gap, still the issue is I'm gonna be looking at setups around 8:30. Why 8:30? 8:30 is what? Let me go there. 8:30 is your New York open. We don't have news on Tuesday. Don't forget that. We don't have news on Tuesday, so I'm using 8:30. If it was equities market, the likes of Nasdaq, ES, the Dow Jones, then I could be using what? I could be using um excuse I could be using 9:30 because that's what? That's equities open, right? But since there's a commodity Then I'm using 8:30, which is New York Open, and we don't have any news on 8:30. So if you look if you look at this 15-minute time frame, on this hourly fair value gap, we trade into it. We have what, a series of down close candles, and we fail to displace above them right here. So there's too much for me, right? There's too much for me around 8:30. So what am I doing? I'm going to a lower time frame, which is the 5 minute time frame. Trading into Treating this as our point of interest for entries, right? Series of down close candles, trading into our point of interest. We displace above them, we come back into that. I'm buying that shit. Buying this order block here, right here, entry right here, stop loss on this low, target that swing high. Why would I be trusting this low not to be broken? Right here, I'll be using what we refer to as SMT, right? It's a cracking correlation between closely related markets or closely correlated markets. If you look at gold, it goes hand in hand with silver. You look at Nasdaq, it goes hand in hand with S&P 500. You look at Euro USD, it goes hand in hand with GBP USD and DXY, which is the dollar index, and so forth and so forth. You understand? So as you can see, we don't take out this low. But if you look at silver, you realize that we are taking out this low. This very low. Around 8, formed around 8 on the hourly fair value gap. It's been taken out on silver around 9. We'll get into that, don't worry. So I want to show you something that is that low. It's not being taken out. You can see that dotted low, green dotted line. So there's my entry on this order block. When we come back into it right here, I'm putting my stop loss here and trusting not to be taken out. And then you can have another entry here. Same thing. We are using this order block to frame a propulsion block or a new order block. It's the last down close candle that engaged this order block. We displace above it here, or we close above it here on this candlestick. I'm buying this next entry. We come back into it here. I'm buying it stop loss either here or on that protected low. Same shit. Now let's go to our SMT. That is that SMT I was referring to. SMT with silver. Let's go to silver. SMT with silver, there's still gold. Let's go to silver. See, around 8, we have that low that we saw on what? This very low, right? We go to 9, we see silver running out that low. That is a cracking correlation. It's a differentiation between these two related markets right here. Around 9, we don't take out this low on gold. This is silver XAG USD. Gold is XAU USD, so you don't get confused. Now, I think that's basically that with this presentation. I'm done. Hello? Yebo. Awe a ke ntse ke lwa le o mo tshwara one ya mothako a rota. Neighbor, no.